I think that's probably my only gripe with the fintech industry largely. When I say fintech, I mean like fintech and crypto. But this is more with the product and the business people, less with like, my compliance community. I think on the product and the business side, we need to have an ethical framework where when we are supporting different products, we are coming up with absolutely crazy, funky ideas. I think we need to pause for a second and really think about how these products can get misused. And you want to be able to define if that's the part of history that you want to be you want to be associated with. When you think of products like, BNPL, largely the idea on BNPL is you're paying off your loan in 4 or less installments. So it doesn't get attributed as a credit product, which means that I don't have to go and check your eligibility. And I can basically give you a loan for you to buy a pair of Air Jordans or a scrunchie or whatever you want, like, which is anywhere from like, maybe, I don't know, $15, $20 to about $200, $500. I think the average ticket price is about $250, $300 is what I read a couple of months ago. And you have to pay this back. If you're not able to pay back in 4 easy installments, your APRs could be as high as 36%. And even more important than the higher APR is the fact that this default sits on your credit file for a very, very long time. As a minor, you should not be able to apply for this kind of loan. But there have been consistent studies out there which says, and they talk about how these products are marketed towards, younger children. Everybody spoke about like, Air Jordans. If there's a pair for like $200 and my allowance is $50 a month, do I feel confident that, yes, I can go and now suddenly buy a pair of Air Jordans and I can pay 50 months for the next 4 years? Yeah, I think mathematically it sounds like a plan, but you miss one payment, this is going to sit with you forever. The fact that you could never afford a $200, pair of Air Jordans in the first place. And now you're going to have trouble finding a job, getting a car loan, getting to your job. All of these things couple and they add up, fairly quickly. So a product, that you've built that kind of goes around the regulation doesn't require, the eligibility to be tested. But you have to make some effort to make sure that this is not getting, your target market is not, 14-year-olds. Your target market is not people who are not well versed with, financial literacy or people who generally cannot afford that product because you are now waiting for that 36% APR to kick in. It's a lot like subprime lending is what I, spoke about in that article. But yeah, I do firmly believe that I think the growth and the product people, we get this hype from building something and putting it out there. Does it have a positive impact? Definitely. I'm sure like there are tons of really solid use cases for NPL, but the bad one, we're not talking about what controls are we going to put to prevent that from happening and not become the core market. And I can apply this analogy to like, multiple different products in the fintech space, but I feel like we should just be talking a little bit more about, the ethical boundaries and how do we go back and prevent misuse of these products. And I think the second example that I would use is Robinhood. Right. So the whole case of during the pandemic, kids signing up, using stolen identities, buying stock. It's like using literally, Robinhood as a casino. There's no reason for you to be able to do that. And then some misreporting that happens, some kid, jumps off of their roof and they lose their life. Yeah, I think, to build some more consciousness and making sure that these products only get used by people who are supposed to use them. I think that's important. That's on us, not just compliance people. Compliance always pushes back to make sure that, those controls are in place. But even from a product standpoint, I think for folks to start thinking about those constraints, I think it's very important.
That's interesting. And what do you think? Because like in crypto, you were based in the UK for a bit. The FCA is very strong about I believe it's the FCA, I could be wrong, about advertising crypto, whether it's on banners or in the metro. They scrutinize crypto. You have to put in certain disclaimers. They have to be large, pretty much taking away from any advertisement that would be effective in today's marketplace. Do you feel that, maybe buy now, pay later should have to adopt similar regulations?
The answer is yes. I don't know when was the last time you and I read a disclaimer. I read disclaimers only to see what the fine points are so that we can use them, when we provide services to our clients, but that's more commercially driven. I don't think disclaimers are like, that's like dog fooding, like that's like food for lawyers, right? I mean, that's a legal checkbox that you're checking.
Yeah.
I think it's a little bit more than disclaimers. It's a little bit about, educating the community and the societies. I think that's very important. It's not going to hurt for us collectively to run campaigns that you can go back and say, hey, this product is geared towards solving X, Y, Z problem. If you're under the age of whatever, like you cannot use this product. It's a lot like, cigarette smoking. I think we, not to say that, kids are not a target and they don't, go after those
Right.
products, but I think we've made collectively an effort. If you see 13, 14-year-old, smoking by a street corner, I think you're going to stop them and talk to them and try to dissuade them, but you're not going to do that if it's a 25-year-old. So I think having some consciousness built out in the society, I think that's just going to be important. And the flip side of the story also is that, again, we have like bank accounts for children now, which I feel is a humongous plus point. I think it's amazing that you can start building financial literacy in children by giving them not a piggy bank. No one uses the piggy bank anymore, but you're giving them a bank account and the parents have oversight and they can actually see. Step is a great example of a fintech in the US that's doing leaps and bounds in that space. But at the same time, there are very specific regulations that once you have my details and my child's detail, you cannot go and target my child and try to cross-sell them products and show them different things they should be buying based on their spending profile. That's just illegal. You cannot be doing that. But what you often see fintechs doing is you see them like using influencers. It's like product placement happening and these kids are watching the same shows and suddenly they want that product. So you're kind of going around, again, the regulation and the requirements, but I just feel like that's probably not cool. If your product is good, the parents and the kids are going to adopt and they're going to use it. And if you get these children to start using your product, you've got like customers for a lifetime. But I think staying within the ethical boundary is super important.
Yeah, they can't target your child. They'll just get all the influencers that your child follows and target them with all the products and services that they use. But we touched on regulation, and you work with fintechs and crypto companies, so I think regulation is probably going to be top of mind. That's probably why they're coming to you in the first place.
Right.
What are the loopholes? What are ways that we can work within the regulation? I think the biggest challenge for a lot of crypto exchanges is you never want to be first, right? If there's emerging regulation, you don't want to be the first one to change. Like it seemed like Binance was holding out as long as they can before they had to kind of follow the rules. And we saw the market share that they were able to get. We also saw the reputational damage and the financial damage they took. But a lot of people are looking around like, hey, that kind of works out in their favor. They have 50% of the market share. They probably have 70% of the trading volume. What advice do you give your customers that are like, hey, can't we just do similar things? Or why is this company over here in my jurisdiction doing that, but we can't? How do you kind of let customers know what's the best path when they're seeing Binance? They're like, hey, I'll take that $4 billion risk.
Yeah, we see that changing now a lot. So about 5-ish years ago, the idea and the mindset was what you have, the typical tech mindset, shoot first, think later, right? While they're still figuring it out, we're gonna have the early movers advantage, have a customer base that big that the regulations will have to come. What was that movie? It was a Kevin Costner movie. I'm forgetting the code, but I think it says, if you build it, they will come. Or if you build it,
feel the dreams.
Yeah, so Field of Dreams. Yeah, that's the one. So theoretically, it sounds great, right? But they came for a very wrong reason. So this is not the fun reason that they came for. So I think with the bigger exchanges, they definitely have a lot of legal firepower. Some of them that we work with are doing a phenomenal job of spending a lot of their time in DC. They're engaging on the public-private, partnership level. They've got like great policy teams. They are talking to the government. They're talking to, the banking committees. They're trying to educate like senators on both sides. They're trying to educate lawmakers on exactly what their products do. And they're trying to influence change by means of engagement, but they have a lot of money to be able to afford to do that. 3-ish years ago, our early stage, when Web3 was on fire, DeFi was on fire, we had a lot of our early stage customers who were willing to take the risk. They were like, we'll see what happens, because the banks were dying to have them on board as customers, and they were very curious to get started. So they tried to get state licenses. Somebody tried to register as a broker dealer. Somebody tried to get some exception here. And there was a lot of legality by assumption because we have applied and some law firm came back and said, yeah, maybe somebody's doing it. Maybe you can try this and try that. There was no clarity, and there's not been clarity even till now. But what has changed is two things that happened. One is with the crypto downturn, the investments dried up. So a lot of those early stage companies died their natural death and they don't exist anymore. The others pivoted to becoming more infrastructure businesses. They're well funded, and they also have a pretty good appetite in the sense of, whether the market's going to swing. But what's happened there is their banking partners have stepped back. So their banking partners are giving them an insanely hard time. And when you're on the banking side, when you're doing your due diligence, the first question that you typically are trying to understand or ask is that what is your funds flow and how do you think you're not regulated? That's what the banks are most interested in. And so they have to stay within the regulated perimeter right now. And I think that's what's kind of keeping this whole industry a little bit stable. We're not seeing a lot of younger crypto companies wanting to take a ton of risk, at least in the United States. What they're really trying to do is they're operating pretty heavily from the United States, but a lot of their presence is in Latin America, in the African markets, and they're trying to move money in those jurisdictions without them, touching the US system pretty aggressively. So I think that's what's happening, but eventually I feel that has to change. There's been a lot of clarity when it comes to the regulatory landscape in EU, with MiCA being released, with Hong Kong laying out the red carpet for the industry. I think there's a pretty intense expectation from the US regulators, for them to come out with clarity. But again, on the flip side, the challenge is some of the heavy-handed state regulators. If you talk to them, and we've had some closed door conversations that we've asked them hey, a lot of our customers are not happy. They want to get out of the US and they want to take their business elsewhere. What do you have to say for us? And the response has been yeah, if they want to go tomorrow, tell them to leave today. We don't give a shit. That's not the.
They're packing their bags. They're we got a discount. We got a discount to the luggage place. Let us know if you need anything.
You're definitely not expecting that response. But the counter to that response also is that they're saying the number of applications for local state licenses is quadrupled. So they're right. We have no dearth of business. There are new businesses coming up that want to be regulated, but the regulators want to see these businesses regulated like a bank, like a Citibank and a JP Morgan. And a lot of these smaller companies or even these bigger exchanges, they don't have the appetite to build a bank-like program. So I think there's a happy medium to be found, which is how do you build effective, lean compliance programs, which are more tech-driven, that allow you to control the cost and still be effective. I think that's the holy grail. If companies can find that, that's what success looks like.